Welcome to another episode of our Capital Ideas podcast. We get to know the people behind the portfolios, spend some time with portfolio managers and analysts, get to know some lessons learned, some ideas, a bit more about Capital Group. Today, I'm joined by Ritchie Tuazon. Ritchie is a portfolio manager for fixed income based in LA. He's been at Capital Group for 14 years. Ritchie, welcome.
Thanks for having me.
Very few of our portfolio managers have started out as traders. You did. You've been super successful. Talk about that transition.
Sure. So yeah, I out of school, I started in investment banking and knew nothing about trading. Once I learned about what trading was and what the markets entailed, I instantly fell in love. I instantly fell in love with putting together the pieces of the market puzzle. And so after business school, I went into trading and loved it. When we had our first child in 2010, my wife and I both knew we wanted to come back to Los Angeles. I was living in New York with Goldman Sachs. And luckily there was a trading seat here at Capital open, and that started my capital journey.
And so talk about that. How do you take what's core to trading and translate that into long-term portfolio management? Because they're very different. And so talk about that, because the quantitative outcomes for portfolio managers, the number one driver is the 8-year number. The number two is 5-year, then 3-year, then 1 year. So literally the inverse of short-term trading. When you're thinking of constructing portfolios and you're thinking of those 5-year and 8-year results, how do you think of short-term opportunities and then just long-term themes?
Right. I would say that understanding what's happening over the short term is very informative for forming a long-term view. So really understanding what the Fed is telling you on a week-to-week basis really informs you, for example, what they're thinking big picture.
Right. That's a good example.
I would say economic data, when inflation starts to pick up, even though long-term trends may say that's not the pattern, that could also inform you, as an example. So I would say there's a lot that you can gain from a long-term standpoint by understanding short-term moves. But really, our job is to understand what's going to happen over the long term and make sure those investments are in our portfolios.
So you mentioned inflation. I remember way back when, and you mentioned 2010 when you had a kid. 2012, you had another child. It was called our inflation protected strategy. So you were one of the ones who pushed that and said, we need to have a TIPS, Treasury Inflation Protected Security TIPS fund. Why did we need that? What were your thoughts around that? Why was that? Was that your second or third kid? I'm not sure if the TIPS fund was one, but why'd you need that?
Yeah, so I guess technically it was my third kid.
Third kid, okay.
It came 4 months after my second child.
Got it.
But, before starting at Capital, I was a TIPS market maker at Goldman Sachs. And so I saw all of the large money management firms and their TIPS funds thrive. And we were making markets for them, and they were all good products. When I joined Capital in 2011, first thing I noticed was we didn't have a TIPS fund, and I immediately sort of asked the question, why not?
Mm-hmm.
I never really got any great answers, and that motivated me to
keep
start
pushing
one.
Yeah.
Yeah. And this organization was just really great about thinking about the market opportunity. And we launched in December of 2012. And now it's a $15 billion franchise, and,
Wow.
and things are going great.
13 years later. Fixed income, it's part of a balanced portfolio. It's diversification. It's really important. Everybody knows that. How do you see it in your mind fitting into a portfolio? Because that's a question we always get. Sometimes people look at the equity market, see these, especially the last 15 years, they see the S&P compounding at 13 or 15% and say, wow, why do I even own bonds? So how do you think of fixed income in a diversified portfolio?
Yeah, I would say that one thing I really love about being a portfolio manager at Capital is that we take the role of fixed income very seriously, and that we understand that the fixed income part of a portfolio needs to be the ballast when times are tough.
Yeah.
And diversification from equities, capital preservation are both attributes that that most investors seek. And so what we do here is not simply out yielding the Barclays Agg or whatever index we're trying to beat, but we're using security selection, duration, curve to really add value while also preserving the qualities that you'd want in a fixed income portfolio.
Yeah, I think that's so important. And fixed income, I mean, when you think back to post-global financial crisis, that was a zero interest rate period in the US. Outside the US, it was negative rates for a while. But inside the US, it was very close to zero. And so there wasn't a lot of income. Today, with treasury yields, whatever, anywhere between 4% and 5%, you get a lot of income in fixed income. So the role arguably might even be more important. Just as you think of capital market assumptions, someone's capital market assumptions may be 6 or 7%. You're getting a long way there in a more secure fixed income portfolio. I mean, I think that's how I think of it.
That's right. Real yields are over 2%. It sort of feels like you can get your cake and eat it too right now, with that capital preservation and capital appreciation if things were to go poorly in equity markets.
Let's talk about the next 5 years. I'll ask you to open up the Ritchie crystal ball. In the next 5 years in fixed income, is it reasonable to think that your starting yield today is approximate to what your total return may be annualized over a 5-year period, more or less? How do you think of what the next 5 years look like?
Yeah, so obviously the ball can bounce in a lot of different ways. If the economy stumbles, you're going to be doing a lot better than 5%. If things are kind of status quo, you could probably expect about 5%, which is pretty good. And if you were to look at the TIPS asset class, for example, if inflation were to spike again, you're locking in north of 2% real yields. You're looking at 5, 6, 7% if inflation were to spike. So pretty good opportunity, in my opinion, in fixed income right now.
So let's talk a little bit about active management in fixed income. It's been, for equities, a lot of folks look at the last decade and see it as a heavily concentrated benchmark, hard to beat that benchmark. Now the market's broadening and people are seeing the real benefit in active management with that broadening. In fixed income, I think most people have believed for a long time the vast majority of fixed income managers beat the benchmark. You know, you talked about the Barclays Agg, the broad US benchmark, the core benchmark. I think there's something like 10,000 securities in the benchmark. How do we beat the benchmark over the long term? How does that happen?
Yeah, I say broadly, we have across fixed income, we have upwards of 60 investment analysts that are meeting with management teams and really understanding strategy. When there are over 10,000 issues in the Barclays Agg, we don't own all of them, obviously.
You're picking a subset.
Yeah, so you pick a subset. And because we have boots on the ground, we have access to management, we stand a pretty good chance to pick the better bonds. In addition to that, where I focus mostly is on interest rates and using duration and curve and inflation instruments to enhance portfolios. And that's something that also provides opportunity.
Yeah, so talk about interest rates, because one of the things you hear regularly, this is I think of as fake news, but you hear regularly, it's impossible to win in the rates market. It's impossible to consistently generate alpha or excess return in the rates market. Why is that not true? Let's hear it from you on why there's opportunity there.
Well, I'd say the most common misconception is that a money manager trying to make money in the rates markets is simply trying to predict 10-year yields up or down. And that is not what we're trying to do.
Right.
Right. That's a very tough game. You can have a slight edge in predicting yields higher or lower, but the edge is probably not going to be substantial. There are other ways to use interest rates to generate excess returns in portfolios. So for example, what does duration in the United States look like relative to Europe and Japan and other parts in the world? What does relative value look like between the slope of the yield curve and the level of rates? Or what does the relative value look like between the level of duration and where inflation is priced via the TIPS market? We also take a lot of views on what's priced into what the Fed is going to do. So for example, in 2020, right before COVID, the market was pricing in 4 basis points of cuts for the March 2020 meeting.
So basically no move.
There was
almost no move.
Yeah, and we had on the ground research across the world. We had that night watch team looking at COVID very intensely, telling us there was a 25 to 30% chance COVID was going to get really bad. So if you thought about that, at that time, the rates market via the March Fed meeting was pricing in something like a 3 to 4% chance that COVID was going to get really bad. And our internal research was telling us
a lot higher,
25 to 30%. And so that was a very good opportunity for us. So you have a lot of opportunities in rates markets that are not simply our 10-year yields going higher or lower.
Talk a little bit about portfolio strategy. You've been involved in that for a long time. So the portfolio strategy group, it's a subset of our fixed income group. They then bring the whole fixed income group together. Some equity folks who are in balanced strategies join those meetings. And it's really about trying to find a leaning towards duration, a leaning towards credit quality, a leaning towards our curve positioning. Talk about that process a bit, if you will.
Yeah. So we meet several times a year as a fixed income group, whether it's in London or Los Angeles. We all get together. Every sector presents to the portfolio strategy group kind of what's going on in their sector, what the opportunities are, what the risk reward characteristics look like. The body called PSG then distills all that information and comes out with guidance and says, hey, we like owning duration here because the risks are tilted towards duration.
So on a dial, it will point to from short duration to neutral to long duration. That dial may point just a little to the right of saying long duration.
Correct. And the goal of the portfolio strategy group is to put together a lot of different dials that make sense to form a balanced portfolio that has positive expected value, but isn't taking excessive risk. And that really serves as the guidance for most fixed income strategies. But it's a total team effort with every sector group contributing to that decision making.
So the team's got these dials, you put them all next to each other, duration, curve, credit, and the individual autonomy for an investor still exists, but in your mind, you're seeing the general direction of travel that we want to take as we're rowing as one team. Is that how you would think of it?
Right. Yes. I have discretion as to how to implement themes, but broadly speaking, we are rowing in the same direction. And there's often a lot of debate at these strategy meetings. And oftentimes what you'll see is debate leads to better outcomes.
All right, let's talk about your investment edge. You are our fixed income team, and I have a special place in my heart for our fixed income team, as you know. Our fixed income team has a lot of really unique investors, different strengths, different skills. You are a super differentiated investor. So what's your how would you describe your investment edge?
Yeah, I would say there are 2 things that I think I do relatively well. The first is I ask a lot of questions. And so, we'll have our weekly rates team meeting with 8 of us in a room. And I think I probably ask 60% of the questions. I just love asking questions, getting to the bottom of things. And I think that's a relative advantage. The second thing I'd point out is I think once I gain conviction, I tend to swing pretty freely. So in other words, I don't overthink it. I don't get paralysis by analysis. Like once I get that conviction, I feel like I don't overthink.
Yeah, I think those 2 are super true about you. And they are superpowers, both of them. On the other side, we all mess up. So when you've learned a lesson, what kind of things tend to get you? Every investor has a different thing that catches them out. What are the kinds of things that get you?
Yeah, I would just say it's a very fine line between having conviction and sticking to an investment and hubris, right? And so just being paranoid about making sure you're not gravitating towards the hubris and always testing your own theses, I think is something that over the years I've learned is super important. So
that's got to be the hardest part, because when you are a high conviction manager, and it's hard to say something's changed. It's hard to push yourself on that. What's changed, and how do I unwind now that the thesis is different? And I see lots of folks struggle with that over time. I think if you can master that part of it, you could take everyone can take some volatility out of the portfolios, but it tends to be the hardest thing for investors to do. So I want to talk about mentorship. Tell me how you think of mentorship in general, and then maybe pick a mentor that's been super helpful to you.
Sure. Yeah. So, this is something I tell my daughters all the time. They stress out a lot about getting good grades and going to a good school. And I try to tell them, it's obviously good to develop a good work ethic and try to get into a great school, but it's not, the school you go to is not the be all end all. It really is about learning how to learn. And then once you decide what you want to do, really figuring out a good network of people to help you, to develop you, and teach you, and to do everything with passion. And I think when you talk about mentors, I think my dad is probably my greatest mentor. Everything he did was he was just so passionate about, and he really gave his all. And I think that's probably the biggest key to success is making sure you find something you're super passionate about, something that doesn't feel like work. And that's why I'm so glad I found this job and markets, because it never really feels like work.
Yeah, I think that's right. And you're a student of the market. So if you love something, you tend to be better at it. Talk a little bit, you talked about the advice you give your daughters, but if someone were wanting to get into our business today, and they have that passion for markets that you have, what would you say to a young analyst starting off at Capital Group Fixed Income? How would you tell them?
Yeah.
What would you tell them?
Well, so it's funny because last week I sat down with a younger analyst at Capital, and one of the pieces of advice I gave was, so this person is now going to be covering Canada, Australia, and New Zealand, and mostly the rates markets in those countries, and so it's very macro in nature. And my advice was, when you're managing in macro markets, it's really important to form a network of people that you can bounce ideas off. So it really invests the time to find good people that you can talk broad themes with, that you can bounce ideas off of. Because if you have a good network and you're thinking about big themes and macro themes, they're going to save you from some really bad mistakes, because something you think is a good idea, they will point out some political aspect or some other macro aspect that will end up saving you. And that's happened to me quite a few times.
Excellent. All right. I'm going to get into the office treasure hunt. So I am going to show you something, and I ask you to describe it. I'll even ask you to hold it and describe it for those folks who are listening as opposed to watching. But what do you have in your hands that I took from your office? By the way, I have one of them in my office too, but go ahead.
Yeah. So this is from 2015. I think you were about a month or two into your tenure at Capital Group. And we used to have a ping pong table on the trading floor at that time. And I knew you could dabble a little bit. So I think I invited you to this charity event at Dodger Stadium. Mm-hmm. There were probably 5 or 6 of us. Oh yeah, here we go.
There's a picture coming up, by the way. And the picture of 5 of us at a Dodger Stadium on the field at a charity event.
Yes. And I think this is actually the year after the year we won, but I think we went 2 years in a row. But the thing that I remember from that first year when we got this trophy were two things. First, I learned you could pitch very, very hard. When we threw pitches at the bullpen, I think you were throwing around 75, 80 miles an hour.
Yeah, slowing down in my old age.
Which was very impressive. Secondly, your competitiveness really showed when we played in this tournament, and we ended up making it to the finals against, call it, 25 other teams. I think that was the moment I knew we had a pretty good chance with fixed income, with you taking on the lead.
Well, it's funny. You know what? So Ritchie and I lost in the finals in 2015. This is the doubles finalists, but not the champions. And I knew we were going to lose when the guys we were playing came in with headbands and their own ping pong paddles, I knew we were done after that. Whether it was the intimidation or the fact that they actually practiced, either way, it was just good to make it to the finals. It was super fun.
It was a good run.
On a personal level, you're a pickleball guy. You and I have played before. You're better than I am. I will say that openly. But in pickleball, 5 so years ago, you actually were one of the founding members of a professional pickleball team. I think you're an owner of a team. Can you talk a little bit about that? Because I think it's a trend in the U.S. that's just incredible, and I'm not sure how much globally it's taken off. But tell us a little bit about your pickleball interest.
Yeah, sure. So for me, pickleball was a COVID sport. Obviously, it's an outdoor sport. It didn't require a lot of space, so pretty easy to find a space for a court. I took up pickleball in early 2021, and almost immediately, given my competitive nature, started competing in tournaments around California. And at one of those tournaments, I met a co-founder of a league called Major League Pickleball, which is a team-based format with the best players in the world. That co-founder had already a fully subscribed list of teams. He had already found 8 buyers of teams for his league. I told him I was very interested, and the thesis was that pickleball was going to continue to grow. And he kept me close, and when someone dropped out, one of the 8 original owners dropped out, he called me up, and I hit the bid, or I lifted the offer, I guess you could say. And it's been 4 years since that moment, and the league continues to thrive. I think we'll be on ESPN2. Yeah, it's going pretty well.
And so that's your competitive juices coming out, and you still play. I haven't played with you in a while. Last time, I don't think I could walk for like 3 days afterwards. But you still play yourself outside of your interest in the team and the sport and the taking off in the U.S. You still play all the time?
I do. I play in a league on Monday nights. So
nope.
so definitely play.
All right. Any correlation to that and how you manage money? I mean, when you're thinking of the team that you have and guiding them, and then you have a team here that you all work together, are there any parallels, or is that a stretch?
Yeah, I think putting together a team, I can see a lot of parallels. I think one of the best things Capital does is we really focus on the virtue of respect. It is absolutely mandatory at Capital Group that you respect your colleagues and you treat people with respect, that you create a good working environment that we all are happy to come to every day. It's kind of funny in pickleball, we've tried so many different combinations of players. And obviously talent is the first thing you're looking for. But over and over, you'll kind of see the thing that really tears apart a team is when there's finger pointing or people don't take accountability and they don't have humility. And so really seeing that on the pickleball team just kind of reinforces what we're doing here at Capital and makes me really appreciate what we have here.
Yeah. I think that's great. Okay, we're gonna finish up with a moment of gratitude. You've seen the podcast. I know you have, so you know this is coming. But Ritchie, what are you grateful for as I hand you the mug?
Yeah, so I think the obvious one is obviously my family. They're my rock, and I have 3 beautiful daughters that really make my world. But other than the obvious one, I would say that the rates team, it is something I'm really grateful for. We are in the trenches together every day. We all sit on the same row on the trading floor, analysts, portfolio managers, portfolio strats, and traders. So we're all on the same row together. They just make my life easy. It's so easy to work with them. So extremely grateful for the rates team.
Yeah, you've all built such a nice community, and I love walking down that row and just listening to the conversation. It's a great community of folks. I have a surprise for you. I usually don't end with a surprise, but I have a surprise.
Okay.
So I have what I have for Ritchie is a pickleball paddle that says Capital Group on one side and RRT, because everyone's known by their initials internally. So I'll ask you to hold that up. And thank you, Ritchie. I appreciate you being here. I appreciate how you love investing. You love investing. And so I really appreciate that about you. And it's contagious in a very positive way. So thank you for everything you do for Capital Group. Thank you for being here today.
Thanks for having me.
Thank you all for joining us on another episode, and we'll see you again soon. Have a great day.